Hey everybody, this is Jim at SP500chart.com. It's about 5 o'clock on January 1st, 2014. I want to wish each and every one of you a happy new year. And let's take a look and see what took place at the end of 2013 as it relates to the S&P 500 after. I remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy that draws lines on charts. Let's take a look. The first thing that I want to show you is, ta-da, the S&P made its minimum target of 1848. On the final trading day of the year. Where did we get that target from? We got it from the depth of this pattern right here that started out looking like an inverted. Well, it started out, to be honest, if you'll remember, we thought we may be dealing with a top. Remember. But when we failed to take that neckline out, and when we got a series of bounces just underneath that neckline, then finally broke this orange line right here, it morphed from being a potential top pattern into a potential bull flag. And when we came up and retested these levels around 1808 or so, it looked like we may form an inverted head and shoulders pattern. Remember, throughout 2013, we saw a number of inverted head and shoulders patterns, both decent sized and some very, very small ones, that formed without the benefit of a well-formed right shoulder. If we zoom out on an hour chart, we have one right here. Left shoulder, head, tiny little right shoulder. Here, left shoulder, head, and an even smaller right shoulder. And I have to be perfectly frank with you while I wait for the chart to come back up, that when you see that, it's a little disconcerting because we've seen some extremely well-formed inverted head and shoulders patterns over the past 5 years, but lately they've been this kind of mutated variety. So what did we get? Well, we got our breakout, and we knew once we got that we should look for a target that is as high above our neckline of this pattern as the head was below, placing our target right at about 1848, and we made that target. That also was made the call that this was a bull flag look a little bit smarter because it played out that way. Here, let me zoom in that way. Okay. So we broke out of the head and shoulders, started up in a pattern that looked like it could have been a couple of varieties of channels, but suffice it to say we went up, then sideways in a descending wedge type pattern, which would be a bull flag. Made the minimum target on the last trading day of 2013. So what do we look for going forward? Well, first off, if we back out on our 30-minute chart a bit, perhaps even a bit more than that, we have a line right back here that that goes back to our last couple of highs. We're getting close to that line. So I would watch that kind of closely. You know, we may get a January effect. We may power on up. We could look back on this and say, indeed, our flag right here is flying at half-mast. That's all possible, but we've got this line that's still on the chart. We also have a green line right here that broke that if we approach this line at some point, that should also be resistance. So we've got resistance here and resistance here. What's this blue line? Well, good question. That line goes all the way back to a couple of tops, one in 2010 and 2 touches in 2011. We have not been up to that line in more than 2 years. So if we get there, it'll be interesting to see what happens. So guys, all I can say is what a year, and I think we had some pretty good calls. Right now, we are kind of in the situation again to where, having met a target and with no large predominant pattern on the chart, all we can really do is look at this and say, well, we are looking at every line that's above us as being resistance, and every line that's below us as being a potential source of support. There is just nothing else in the way of a pattern that would point us to anything higher than what we just achieved at 1848. One thing to watch out for too is as we keep creeping higher without benefit of a significant, and when I mean significant, I'm talking about a 10-15% correction. We haven't had one of those in a long time. And as long as we keep going up without one of those, I think we need to be on the watch for any sign of a top. And one of the things that could be developing here, I'm not saying it is, but it could be, using this top line as a resistance line and then drawing a new trend line across our last 2 lows right here and here. There is a possibility, and I'm not saying a probability, a possibility that this could end up being something of a, what some people call a megaphone, or a broadening formation that is a sign of a little bit of uncontrolled exuberance. I think it's probably time for me to clean up this chart a little bit. I will do that before we meet again. But you can see right here, if this was to be a broadening top, this would be our bottom line, this would be our top line, and if this line were to break, then that should be setting up a move that again we would measure just how big this pattern is. We would at that point need to look at some support lines, see how tall this pattern is, then get an idea what to expect. But right now, even though we've got some of the beginnings of this, they're not confirmed until you get a breakdown of the pattern. And right now, we're kind of up close to this line here. So let's just do this, starting 2014. Let's see if this line works on this market as resistance. If it does, and we start to get turned back down early in the year, then I would be more inclined to look at this as a potential broadening top than I'm certainly willing to call it right now, because this is very premature. So right now, great that we made this minimum target. Let's see if we get a January effect, and if we do, if it will be enough buying to take us over this brown line right here. But then remember, we've got that long-term resistance line back from 2000. When did I say that was? 2010 and 2011 tops that we are approaching. We're not that far from it. It's up here at about 1880, only 32 points away. So if the S&P can power up over this brown line, then let's see if it's got enough strength to make it to that line. And guys, this market just continues to surprise to the upside. I think probably one of the reasons is, let's face it, stocks are the only game in town. Where else are you going to go with your money? So as far as if you're looking for the weekly review, all I can really say is I think we had a successful week, but it was based mostly upon, well, to begin with, it's been only 2 days this particular week. So I'm speaking ahead of myself. I'm so used to doing the weekly review on a day when the markets didn't trade. Here it is Wednesday, and I'm starting to talk about the weekly review. Forget that. We'll come back over the weekend and see what happened, and if we are able to get up into some of these resistance lines. But I will say this. This little pattern right here certainly played out very well on the last day of the year with that move up to 1848 and some change to make the minimum target from our inverted, mutated head and shoulders pattern. So there's your video for the day, the session ending 12/31/2014. I want to thank you for watching. Thank you for your support. Let's see what we get into in the upcoming year. Take care.